I'm going to give you a step-by-step guide on how to trade the stock market. Doesn't matter where you are in the world, in life, crypto, it's all the same stuff. So my first guess is if you're watching this video to learn how to trade stocks, then you probably don't have a whole lot of capital to invest. You might, I don't know. There are a number of strategies and things you can do to build up that initial chunk of change. And then there's pink sheet OTC high-risk stocks. That's right, the stuff from the Wolf of Wall Street. Those are very, very risky, but sometimes they have ridiculous payouts. I'm going to show you a couple of strategies with each of these types of stocks that you can use if you don't have a lot of money, sort of spread the risk and make money while doing it. Now, all of these things that I'm telling you, you can do on your phone as well. It's not just your computer or wherever. If you have a cell phone, you have zero excuses. If you want to learn how to trade stocks and you say, well, I only have a phone, I can't trade stocks. My brother made $120,000 on his cell phone in 2 days trading stocks. So I don't want to hear that you only have a cell phone. You don't even have to know how to read. You just have to know how to see a chart, how to draw a line, how to figure out where the price is going to go, and have like $100 to put it. I've been trading for like 15 years, so I've picked up quite a few things. Hopefully some of the stuff that I have learned and that I know will help you in some way to become super mega rich and you can give me all your money. First things first, the obvious, buy low, sell high. I personally don't like Webull or Robinhood because, well, you don't have access to a lot of the stocks that you're going to make a lot of money on, and that's on purpose. And they sell you the spread. Basically, they purchase the stock for a cheaper price and then give it to you for a more expensive price. Should be illegal, but it's not. That's why they don't have commissions. Me personally, I use Thinkorswim, TD Ameritrade, and I also have an E-Trade account, TradingView. There's a lot of good ones out there. First things first, pink sheet OTC stocks. Where I start off is I start on the one-day charts. I have a scanner already set up. You can find scanners on Google, Bazinga. There's a million different places where you can scan for stocks. And I set my scans already to pull up the winners from the day, what stocks are moving for the day. And I also have the losers that I can pull up to show what stocks are falling. And what I'll do is I will run through the daily chart, which is a time frame, the daily time frame of a stock, and see what the chart looks like. Now, what I am looking for is a pattern like this. This stock right here, BEHL. Most of the times, I don't know the name of the company. I don't know what sector they're in, and I don't really care unless their chart looks good. If their chart looks good, meaning the technicals are pointing the right direction, then I will go into further detail and look at the company. There's technical data, and then there's fundamentals. The technicals are basically the charts. Technicals are more like a readout, a printout of human psychology, sentiment, how people feel about the stock. And the fundamentals is the company itself, the CEO, how much money they have, how many shares there is, how much debt to capital. But in my experience, that stuff doesn't matter most of the time, and it matters even less now because people are just getting dumber and dumber. So I trade off the technicals. I think that is what most people do, which is why it's so accurate. The technicals usually indicate that some bad news is going to come out before the bad news even comes out. Crypto is a great example of that. Time after time after time, I can see the chart's going to drop and stop and drop and pop and drop and bounce and drop over and over again before the news comes out, solely based on the technicals, trend lines, and formations. So we found us a stock that is slowly but steadily going up on the day charts. And it's very, very, very inexpensive. It's 0.00006 or something. So to draw a trend line, generally speaking, what you want to do is draw on the bottom side for an uptrend, you want to draw from the spike of the original breakout candle, green candle. This one I'm doing in Doji because the volume's so low, across the closes. You can do on the spikes to the downside, but I generally go across the closes because those are a much better indicator. Now, if I was looking to buy this stock as an example, it's gone up, it's hit the trend line once, twice, kind of. It's very low volume. it's going to hit it a third time. So if I was going to buy this, I would buy this at 0.0005 and expect the bounce to take it to 0.001 or 2, 0.001 or 0.0012, right in that realm. There's a downward spike at the top of this little mountain here, so it's most likely going to stop at 0.001, which, as you can see, it's already done once. So not really that interested in this stock. It's already kind of fulfilled the pattern to some extent of this spike and then coming down to create a U and go up even higher, right, on an uptrend. Keep looking. Apps. Here's another one. Let's see this. APPZ. Now, as you can see, this hit the downtrend. This hit the trend line that I drew. So there's a very good chance that this, I've actually already drew this trend line, but there's a good chance that this will bounce off of this 4 and come back up to maybe a 6 or an 8. So if I wanted to put $400 in there, I could sell it tomorrow or the next day for $600 or $800. See where I'm going with this? Now, there is also the possibility that I could lose $400, right? But I would know that beforehand. There's a little bit of support here. So if it falls below this trend line and hits 3 as an example, I would be looking to sell it. Basically, my risk to reward is the risk of losing $100 and the possible reward of making 800 or more, 900, 86, wait, no, and the possible reward of making 400 or so. I would probably sell it whenever I was $200 or $300 up and just be done with it. Never even look at the stock again. That means that I have a very good risk to reward setup. So if I'm looking to buy this one, I would then go look into the company itself and look at the fundamentals. But we're just talking about how to trade stocks, not how to analyze. It's not how to analyze companies. Trading on the trend of these OTC stocks that have a very high risk to reward ratio, where you have the risk of losing $100, but the reward possibly of making 500 or 600. That's a very good way to get started if you don't have a lot of capital. And if you do lose the $100, it's not that big of a deal. There's always a chance the company could come back and some crazy news things happen and you gain 100% on each tick, as opposed to trading like Apple or Tesla, where you put in $600 and it moves $5 and whoop-de-doo, you made $5 on your $600 investment. Like who would do that? And with the technicals, there's a lot of indicators on pretty much all of these apps that you have. TD Ameritrade, Thinkorswim, like I use, I love because it has so many. I already have my presets for my studies, is what they're called. They're called studies, where I can just load it up because it took me a while to figure it out. There's plenty of YouTube videos to show you how to do this. Maybe I'll make one if you guys are interested. But I already have it loaded up where it shows the moving averages, it shows the volume, the stochastics, and the RSI, Relative Strength Index. All of these are technical indicators that show you when the stock price is going to turn around. As an example, the stochastic has these two lines. One is crossing over the other, meaning that it's a turnaround point. So if I still own this stock, I would be looking to sell this at this turnaround point. Right when this line crossed over the second line, it's a crossover, it's going to start coming back down. Chances are. And it's right at a point on a red candle that has a spike on both sides. So it's lost some steam, and the RSI, the Relative Strength Index, is up higher. The Relative Strength Index is basically the strength of the stock relative to what it normally is. So you can see here when it crosses up above these two lines, when it crosses above, it's overbought. When it crosses below, it's oversold. So that it's overbought, that means way too many people have bought this in relation or relative to how many people normally buy it. So it's going to fall because they're like, oh man, oh my God, too many people have bought this thing. And then they all start selling it. So it's gone up. We have two indicators here that are saying it's going to go down, plus the red candle after a run. So it's looking like this thing might come down, right? It doesn't mean it's going to. It's got 2 or 3 indicators saying it's going to go down. So if you still own this stock in particular, I would probably sell it, which I already did. I sold it, 3 days ago right here, because the because stochastics came to a peak right here. So I sold it. So there's all kinds of defaults on Thinkorswim. I really love Thinkorswim. These are all the different scanners that I have set up right here. If I'm looking for just tiny little stocks, I have it called Nothing Companies and Just Pennies. I'm gonna pull up the Nothing Companies. Here's my Nothing Companies. Now I can scroll through each of these stocks and see if there are any charts that look good. This one kind of looks okay, so I would draw. I have my line tool, so I can draw from the original breakout candle across the closes and see where it's at on the trend. So when this thing comes back, edit properties, I'm going to turn this green. When this comes back down, probably over in this area, I'd be looking at it again. So I can set an alert right here at 7. When it crosses below 7, create alert when it is at or below. And when it falls down below that, it will pop up as a little alert on my cell phone and on my computer to say, hey, this stock is below this price. And then I'll look at it and see if I want to buy it based on what's going on with the chart at that time. So now I found that, I put an alert, I'm going to keep moving. AWN, you can see I've already drawn the trend lines, and look what it did. It hit. Apparently I didn't buy this one, should have, but you can see, I'll pull it up on the big chart here. You can see that it went up the trend line, bounced off the trend line, and broke the downtrend, which drawing the downtrend is from the highest spike down through the spikes to the downside, to the upside, the spikes to the upside, moving down. So the lower highs. So you draw that trend line and it broke right here. So that would be a signal to buy it generally. The reason why I probably didn't is because this is a penny, teeny, piney, OTC pink sheet stock. That's probably why I didn't buy it. But had I bought it at 8, put what, $80 or $800, whichever, I could have sold it at $110 or $1,100 or whatever, and made a quick 20-30% in an hour or whatever, a couple of hours. If you go through enough of these stocks, you'll find chart patterns that look like good buys, right? And if you have, say, $1,000 to invest and you put $100 in each of these, right? This one is an example, FDMF. I have my moving averages. I have my trend line already drawn. I have another trend line drawn, but it broke this trend line, right? The shorter term trend line, this yellow line is a shorter term trend line that I drew right there across this breakout and these two closes going up. So there's a good chance this original trend line, this green line here, there's a good chance that this is going to come down to that area and bounce. It may not. It may follow the bottom side of this trend line, but at least I have a basis of where the price is going to be, right? It's going to be within this range, within these two trend lines. If it pops above this trend line, this 13, then I'll be interested in it again because it's going to go, it may spike up even higher. So I'll set another alert right here for at or above 0.0014. So if it goes above this trend line, that means it's getting good power and steam behind it, and it might take off to the moon, right? That is a decision that I would make when it hit that price based on what the RSI and stochastics look like and the volume at that time. So now we have another alert set. Let's keep on moving down the chart line. Here's another chart, ADTM. Don't know anything about the company, don't know what their name is, don't really care. I just care about the chart right now. So our initial green candle breakout, draw a line across the closes. This one looks like it's broken it a couple of times. It's sort of riding the trend line almost a little bit. So if I was going to buy it today or tomorrow would be a good day to buy it. Now, I don't think I'm going to because on this small fraction of a penny spike, the stochastics shot way up, meaning that it's looking to turn around to go back down. So I don't think it's ready for a jump yet. I just don't. But I will keep this one in my mind and have ADTM maybe add them to a watch list after I end the video. and just keep going down. So just in these, 2-3 minutes, I found how many stocks that have a chart pattern that's in a slight uptrend that looks like it's going to bounce off of the trend line. I mean, you see how this could be profitable if you found enough of these. You're not looking to make $10 million off of $100. I mean, don't be freaking idiot. You're looking to make $100 off $100. Right? Or $1,000 off $100. But if you do invest with this kind of strategy, or you do use, very calculated strategies like this, where you're taking out a certain amount at a certain point, then you'll win. That's the only way you're going to win, is if you can figure out where this price is going to bounce around, buy it when it hits the bottom of the bounce, and sell it when it hits the top of the bounce. If you can do that consistently, then you're going to have to pay me some money, because I just taught you how to become rich. Now, ADTM as an example. This also has support this has a support line that it has bounced off of 3 times. The support line is 0.0006, right? This was the original resistance. It broke above it, and now it became support. So it bounced back. It hit support right there at that 0.006 level. Did it again right here for a few days. Did it again right here. Now, if it comes down to it again, it would have broken the uptrend. You see what I'm saying? So it tried to break out. It tried to, because the market makers and the people interested in this company knew that if it didn't break out over these moving averages and high enough for it to keep the upward momentum, then it was going to fall, based on the fact that it has already hit support 3 times, and the fourth time it hits support, it will be below this upward trend line, meaning that the stock would be getting pushed down. So I'm not interested in this stock, because it doesn't look like it has enough force to get past any of this. So that's the basics of technical analysis. Now, this is a stock that I actually own right now. AHFD. Don't know if it's going to go anywhere. Don't know if it's going to do anything. Don't know. I just threw $100 in to see what was going to happen. I think I even put less in there. Probably like $60 or $70 I put in there. I don't know. But I drew the trend line here. You can see I was expecting it to bounce somewhere in this 6 range, something like that. It came along. It hit the trend line once. It came up higher. This support held up. This support in this range held up at 0.3. It came up, and now it has more support in this 0.5 range. It's got a little bit more support in this 0.6 or 7 range, right? Because that's a spike. It always comes back and hits the top of the previous spikes. So it has room from this range of support, 6, 7, to run up to the bottom of this downward spike from the original run, the original spike, which would put it at 11. So I'd be looking to sell this thing at 0.001. And it's in my watch list. I see it that I'm up 30, 50%, however much it is, and I sell it, and I'm done. It's that easy, and I just do that as many times as possible. Before I get on to how to trade the more highly traded, well-known stocks, high volume like Apple and Tesla and so on, let me just mention too that if you are going to use this strategy of buying these 0.00001 whatever crap companies that are never going to go anywhere, have the intention of getting out quickly. When I say quickly, I mean that same week at the very latest, because there's a good chance that the stock is going to fail and never come back. So ride the bounce, sell it, get out. And also, if you want to be smart, spread your trades amongst 10 of these kinds of charts on these really small crap companies, because it's just the basic odds. If you pick 10 companies that all have the same formation, at least one of those or 2 of those is going to fulfill that formation. And if each tick that this chart makes, every time this thing goes up, it's 100%, or 50%, or however much it is, you're going to make money quick. You're going to lose money quick on some of them, but as long as you pick the chart patterns consistently enough and you understand what the patterns are that you're looking at, like the uptrend and the downtrend, then you should be able to pick enough winners that you'll make money. Here's an example of a loser that I actually bought. You can see I drew the uptrend. I was expecting this thing it was giving me signals that it was going to continue going up. And because it's these tiny little pink sheet bullcrap, Wolf of Wall Street stocks, it fell down below and did not fulfill the pattern. Now, you could say that it fulfilled the pattern right here by touching the bottom of the spike from the top of the original rally. You could say that, but it did break it also by a half of a penny or something. So there's a chance that this could come back, ride the bottom of this trend line, and then continue upward. So I'm not going to sell it. I'm just going to hang on to it. I only have $100 in there. What do I care? Let's keep looking. So you can scroll through on the daily charts looking for formations that you recognize. I tend to stick to 2 or 3 different formations that I know to be very reliable, simply because on these small OTC stock sort of charts, they're going to be very easily manipulated because the volume is so low. So if it's a very well-known stock chart pattern, then it's more likely to be fulfilled by the market maker or by someone who works at the company, and they say, "Oh, look, the chart's doing this. The chart's getting ready to make a pattern. Let's buy it all right here before this pattern starts." So you just want to be able to spot that pattern. That is the trick, is being able to spot the pattern before the pattern happens. When you're trading these large companies that are $600, $1,000, $40, $50, $100 a share, however much, you can buy the options. Options are great because they're very cheap. If you want to buy options on, say, Apple, like I bought some options today on Apple. I bought some puts. A put is essentially you betting that the stock is going to go down. Okay? You're buying 100 shares, or you're buying the option to sell 100 shares at whatever the strike price is. I purchased a strike price at $128, meaning that I think that this stock is going to fall below $128. And if it does, then I can sell my options for a profit. And it only costs $50 if I wanted to buy just one option. That would give me, it would cost me $51. My max profit would be $12,749, and my max loss would be $51. Why wouldn't I? Why wouldn't I buy some of that? I could make $12,000 on one. Like, give me a break. Give me a freaking break. Of course, the stock would have to fall down to zero for me to make $12,000, but hey, it's still an amazing risk to reward setup. These are set up on time frames. Like this option expires in June 18th. They go all the way down. This one's January 22nd. You can buy them June 23rd. You can buy them a long time out. As the time frame gets larger, the stocks or the options get more expensive because there's more time for the stock to fulfill that price, for it to actually reach that price. And there's strategies involved with that where you can purchase, a bunch of puts and a bunch of calls. And just as the stock gyrates, you sell off your options. Now, a call is essentially you're saying that I reserve the right to purchase 100 shares of said stock at a specific strike price. So you reserve the right to purchase the stock, meaning that you think the stock price is going to go up. So if I wanted to buy a call on Apple, as an example, right here I could buy June 18th calls for $133 for 24 cents per share, which the contract is for 100, which would mean that I spend $24 to buy one contract, which is a contract for 100 shares. So with $24, let's go with 2. So if I wanted to buy those, my investment would be $48, the max profit is infinite because the stock could just go up forever. But we all know that's not going to happen. So generally with options trading, you don't have a lot of money invested, but you want to buy the options far enough out that you can that the time frame is not going to be an issue. If you plan on holding the option for like a week or a couple of days, then buy the option, a month out. That way you have time for the stock, for the chart to fulfill the pattern that you think it's going to do, or that the news that's going to come out on it actually happens, or whatever it is that you're trading on. I generally don't like to trade on news. I don't like to trade based on what they're saying in the news. I don't even watch the news. I don't watch it. It's a waste of my time. Basically, I just watch YouTubers. That's what I do. When I'm trading stocks, which is generally on Mondays, Tuesdays, and Fridays, I am usually watching YouTube. So now you have a basic understanding of options and of OTC stocks. Let's talk really quickly about YouTubers that are experts. Now, you definitely want to stay away from pretty much all of these. Pretty much, yeah. You don't want to see, maybe this one, that one might be good. There's very few on here that are actually worth watching. There are a few that I watch. I've been through a lot of them. Some of them I don't know. Like, I don't know this guy. I don't know this guy here. I do know Warrior Trading. Warrior Trading is someone who you definitely should pay attention to. There's another channel that I like. You have to be very careful with a lot of these because they are just trying to make money on YouTube. They're not actually trying to teach you how to trade stocks, right? How to actually make money for yourself. They just want to make ad revenue. A couple of months, they started the channel trading stocks and they don't know anything. They're just getting you to watch them learn how. Like, why? There are a few live streams where people day trade live. See, there's Warrior Trading right there. He's definitely good. He's a smart dude. Here's another one, Lawrence Lee. I watched him this morning as an example. I watched him yesterday morning as an example make $12,000 in less than 2 minutes. I watched Warrior Trading. He made, what was it? It was like $100,000 in under 20 minutes, this guy. The last thing that I'm going to talk about for this video is crypto trading. Now, you might only want to trade stocks. You might want to hear about dividends. You might want to hear about trading futures. You might want to hear about, all the different stocks, shorting, margins, all this stuff that you can get into whenever you're getting into a new account. If you want me to go through that, I'll make an entirely separate video for you guys, but it's a lot. I'm not going to lie. Open a brokerage account. You can download an app on your phone. TD Ameritrade, I recommend because I use them. You can download it. It's free. You can transfer some money into it. There's no minimum, and it's free. And you can immediately start buying stocks. Like, you don't have to buy a lot. You can just look for those chart patterns like I was telling you. Look up a couple of chart patterns. Here, I'll Google it for you right now. Popular chart patterns. Stock. See? And then you have these chart patterns that are very popular, like a head and shoulders. This is the left shoulder. This is the head. This is the right shoulder. And that means it's going to go down. Very simple, very easy to understand. So if you want me to make a whole video on just technical analysis, I absolutely can. Leave that in the comment section below. By the way, if you're lazy like me and you really don't want to find all these stocks by going through stock by stock and chart by chart and yada, because it's a lot, I'm not going to lie, you can go to a website called Open Insider and click Officer, Purchase, Search. This will pop up and show all of the presidents and CEOs and CFOs and VPs and whatever that have purchased stocks, right? Because they have to file by law. So you can go through and say, oh, wow, this guy made a purchase for $2 million. What was the ticker? AEI. So then we would go look at AEI. And see if it was any good. This is the day chart. It looks like it hasn't been around that long. So, it's not really interesting to me looking at it, but the guy put $2 million into it for whatever reason. So there's got to be a reason behind it. Now you can, it's real estate. That's probably why he put it in there. You can also click on the company or the person who bought it, and it will tell you everything that they have purchased or sold and the recent future. And it looks like this is basically the only thing that they have. Oh, nope, Chang something shit. So he bought a bunch of different stocks. You can see all these stocks: AEI, OPHC, DSS, OPHC. So if you're interested in real estate or his type of companies that he's buying, you know all his trades. So he more or less just told you what stocks he's interested in. A rich guy. Because he put $2 million. Now you have another one here, $5 million, right? For CYCN. It's a Cyclerion Therapeutics. Okay. And the industry is pharmaceuticals, right? So you can click on CYCN. And you can see all the people that have bought CYCN that are presidents and CFOs, CEOs, whatever. These are insider buys, right? Meaning that they have some knowledge of the inside of the company, essentially. You can see who sold it, who's bought it, and that'll give you some tickers to go find. CYCN, you know, I mean, if I wanted to look at it, let's look at it. Okay, chart's not that interesting. I got a couple of gap down, gap up. Looks like it wants to come back, but there's some spikes. It doesn't seem to hold the value very well, so not interested. Don't really want anything to do with it. It's not my cup of tea. I like high risk, high reward. That's my thing. Me personally, I want to find a stock that is 0.00001 and sell it at a penny, because that would be a 10,000 times return. ASKE. This is one that popped up on my scanners a while back. I bought it, sold it already, made some money on it. You can see the trend lines that I drew. I started off with the initial trend. I actually drew these lines on my phone, not on the computer, which is why they're not perfect. But you can see I started off with the initial trend. I drew it up where it's going. Boom, it hit the first bounce. Boom, hit the bounce. I bought it right here. That's where I bought it. And I sold it right around here. It's probably going to continue to go up even higher, because they tend to go along the bottom side of the trend line that they just fell under. So as an example, if it had fallen down, if it came down, bounced, and fell right here, there's a good chance it would come up and follow the bottom of this green trend line at some point. So if you do have a stock and it falls down below the trend line that you drew, as long as it's the right trend line and you did it properly, then it'll eventually come back up to the bottom of this trend line, which will be your opportunity to get out, or reassess whether or not you want to hang on to it for longer. Falls down, generally, it comes back up at least a little bit. And that is an entirely another option that you have, strategy that I use, which is the flash bottom, the flash drop, where you can buy the dip and it bounces and you sell it really quickly. But that's for another video. Kind of got to take a pee. I'm definitely not going to explain how to go and set up your account and all of that, because I don't really know how. Basically, you're opening a bank account. If you can't figure out how to open up a bank account, I'm not going to tell you. Now, let's talk a little bit about crypto. Let's just pull up a Bitcoin chart. Any Bitcoin chart, doesn't matter. I use what's called Kraken to trade my crypto. You can use whatever. If you're on Webull or Robinhood, you can buy some crypto. But with Webull, you cannot transfer your crypto to another account. So I highly recommend that you do not use Webull to buy any crypto. Preferably don't use Webull or Robinhood at all. And that's just my opinion. Okay, this is just straight on Google, right? You don't need any special tools or anything like that. I can pull this up on my phone as well. There's nothing, I'm just happen to be on my computer because I'm making a video for you guys. But you can pull all this up on your phone. It's the exact same technical analysis and data that you would use for stocks. The only difference is with crypto, because of the high volume, it is a lot more reliable. So if you have a chart pattern that is coming through on a crypto chart, chances are it's going to fulfill, and it's going to do it very well to a T. It's a lot easier for technical traders who trade solely off of technicals to trade cryptocurrency because it does do what it says it's going to do. This could be the shoulder, that could be the head, and that could be the other shoulder. It's going down. Also with crypto, you don't have to worry about whether or not you have enough money in the account to cover your purchases and sells like you do with stocks. So if you start with $100 in crypto, you buy $100 worth of Bitcoin as an example, and then you sell it at $101. Now you have $101 and it's instant. You can immediately rebuy something else with that $101. Now with stocks as an example, if you only had $100 in your brokerage account, aka your bank account, because that's what it is essentially. If you purchased a stock and then sold it, you would have to wait like 2 days or 3 days or something to be able to buy another stock. You don't have to do that with crypto. That's why the government hates crypto. If you like and you're interested in technical analysis, which is something I've been doing it for a very long time, 10, 15 years, then let me know in the comments and I'll make a video on it. I'll put together just standard technical analysis, technical data that I use and that a lot of people use to be able to trade stocks, for swing trades, for day trades, for long-term investments. They're basically all the same, just on different time frames. Hopefully this gives you guys a better understanding of the stock market and how to trade. I know I probably skipped over a lot of stuff. I was really just trying to give a broad overview on how to trade stocks so you don't go in the market, lose a bunch of money, don't know what you're doing, have zero idea where to start. The way I look at it is the technical data does not lie. It's just a matter of whether or not you saw the pattern. I'm looking at the chart. Does the chart look like it's strong? Does the chart look like it's going to go up? If it doesn't, I move on. If it does, then I might read the company name. It's just a freaking video game. That's all it is. And if you get good at playing it, you can make a lot of money. Everybody has their own way of trading. Everything that I'm saying is not any kind of advice. I'm not a guru. I'm not giving any recommendations or anything like that. So if any of the stocks that I have shown, you think you're gonna go out and buy them and make money because I showed you these stocks, you're an idiot. You're an idiot. I mean, you might, but probably not, because the moves have already fulfilled and I showed them. They were already on my charts. I already looked at them and I didn't buy them for a reason. And the ones I did buy, I already sold because I made money on them. If you guys want me to show you in real time buying stocks, or want me to do a live stream, or want me to talk about anything else that you might not know about with the stock market or investments or whatever, because I do have a lot of experience there, put it in the comment section below and maybe I'll do a video on it. Maybe it'll help you guys. Maybe you make a bunch of money on it. It doesn't matter where you are in the world. It's all the same exact stuff. I know I haven't uploaded a video in a while and I'm sorry about that, but I've been busy, man. What do you want me to tell you? I don't know. Is that wrong that I want to make a video that helps people? Come on, man. Peace.